Well, it's the tale of two tech companies. One looked like it's on a comeback trail, and the other, well, not so much. Facebook ranking in nearly $1.6 billion in revenue last quarter, now slightly higher than analysts' expectations, but shares of BlackBerry plunging after it unveiled what it had hoped would be its savings grace, new software and a couple of new phones. To Bob Herbold and Munson on what it takes for the company to survive. Bob, I don't know. I'm going to say a very unimpressive conference out of BlackBerry today, and obviously the Wall Street didn't like it either.
Well, Charles, it's a sad tale. You know, if you go back to 2004, this company was getting a great start. The stock price was $13 a share. Early 2008, it was $130 a share. Today, it's around $13 a share and falling fast. The core problem is that what they just announced should have been announced in 2007 or early 2008. They're way, way late in this business. They completely missed a technology inflection point, namely touch screens and apps and the like. So it's a sad tale.
So, Lee, they're by Bob's math they're about 6 years behind. Is it too little too late?
Well, absolutely.
Well, I think it is.
And look at the CEO. I mean, it was out of a Mel Brooks, Western comedy where you have the German coming in on the horse, talking about his Z10. Just from more of a social perspective versus just the analysis here, they are absolutely out of touch. And even though they have the product 6 years too late, as our other guest has said, they describe it as, isn't this exciting? And it's not exciting. So the real hope right now for the deep value players, I am not one of them, but those people who are bottom fishing, is that people who still have a BlackBerry that's getting old, that's about ready to break, that they're going to replace it with another BlackBerry, or that at least half will. The problem is when you look at that free cash flow going out into years, 2, 3, 4 years from now, I don't see what we have. I think that, I've got a CPA, he's an old guy, he loves his BlackBerry, but as soon as that thing breaks, I promise you, he's going to get an iPhone.
And, Bob, is interesting because this is also a cautionary tale about management. I remember when they used to brag about having co-CEOs. Now, you were COO of Microsoft. I think this might put to bed the notion that you can have two CEOs and be sanguine about the world.
Absolutely. They waited way too long to take some action in regard to those two guys who simply watched the world go round for 5, 6 years. Secondly, the brand is tarnished. The brand is old. Buying a BlackBerry today is like buying a Buick, let's face it. Typically, the drivers of a Buick are about 60 years old. No offense to Buick drivers, but the fact is that's the reality of the brand. And the BlackBerry brand is fairly sick at this point.
Well, let's shift gears then. If the BlackBerry is the Buick, what would Facebook be?
I think that, frankly, it's still on the production line, and one of these days it's going to come off the production line. I say that because here's a company that generated 40% increase in revenue, which is terrific, but the costs were up 67%. They're still under construction, so to speak. Hey, 1 billion users, that's very impressive.